Today, we have the pleasure of speaking with Kevin Moss, industry expert and advisor to Valid. Kevin is perfectly positioned for this conversation because of extensive years of experience at the intersection of quantitative risk and decisioning and finance. He was formerly the chief risk officer at Wells Fargo. On the consumer lending side, and also on the FinTech side, he was the chief risk officer at SoFi. He has a master's degree in quantitative analytics from NYU Business School. So with that, Kevin, welcome. I let you introduce yourself and set the stage for the conversation today.
Thanks, Donna. I'm really happy to be here. Love talking about what I do every day, which is for the last 9+ years, I've been working in the FinTech space after a 31-year career in banking and work with neobanks, do a lot of work in fraud and credit.
Kevin, in your opinion, what are the key developments and innovations that shaped the past year in FinTech?
I think over the last year, 18 months, there's been a lot of happening in the banking as a service end. Lots of consent orders and compliance and fair lending risks and controls. So there's a lot where a lot of these sponsor banks, which generally have been smaller banks on the deposit side to get the Durbin leverage on interchange. I think what regulators have figured out is they can focus and put the pressure on the sponsor banks in order to put the pressure on the FinTech platforms, even though they may not regulate them directly. So banking as a service has been really interesting. I think crypto and Bitcoin have been, a couple of years ago with all the problems in their lending and fraud and, people wrote off Bitcoin and crypto, but it's had a really nice comeback. And I think big enterprises are supporting it now. So I think it's been much more legitimized in the last year as a digital currency. Obviously, another area I'd say is just a stressed credit and fraud environment. Big focus starting out in the last year or so on first-party fraud. I do work with Secure. I'd like to put a plug in for the things they're doing. Check fraud escalation, some of the work Valid is doing in check and deposit fraud has become even more important. And then, I'd say that 1033 from the CFPB on where consumers own their data and how that's the portability of your transaction history is really going to, I think, enable AI and ML to continue to take off because it's really well suited to model and the analytics associated with transaction data.
As you mentioned, 2022, crypto was the name of the game. 2023, AI and latest developments in machine learning and AI. What are your predictions? What are the emerging trends that you foresee becoming prominent over the next year or two?
Yeah, well, first off, I think the Fed is going to lower rates pretty aggressively starting in the third quarter. I think so. I'm excited about lending opportunities. I think lending is going to come back in vogue. I think mortgage, there's a pent-up demand, but high mortgage rates have kept a lot of people, particularly first-time home buyers, out of the market. So there's going to be a pent-up demand for mortgage. And I think a lot of mortgage lenders who have been hurt by the shortfall and drop off in refinance volume and even purchase volume have been digitizing their processes. So I think there's going to be the emergence of streamlined and faster mortgage closing and mortgage digital processes. I think 1033 has yet to be finalized, but I think there's a lot going on in the world of deposit aggregation. Big fan of Plaid and what they've been doing with some of their additional services and capabilities that they've been working on. Lots of interesting things that people are doing with decisioning on deposit transaction data. So Prism, others have had, I think, some pretty interesting progress on that. So I see that continuing to progress. Again, I think we're still in the early innings for AI and machine learning. So I think there'll be continued growth and adoption of AI and ML in credit, in fraud, in everything digital.
For sure. Kevin, as it relates to CFPB and the latest regulatory changes, what are the challenges that you anticipate fintechs would face in the near future?
So I think there's two things that are important. One we talked about, in my view, which is, I think all the regulators, FDIC, OCC, Fed, CFPB principally, are focusing in some degree on banking as a service and sponsor banks, and making sure that they are good stewards of compliance and fair lending and other related risks, third-party risk management. So I think that, and then, we have an election in November, and I've noticed in particular that the CFPB has been very aggressive of late at coming out with new proclamations. I wouldn't say regulation, they have more interpretations that have significant impacts. And so I think the CFPB is trying to aggressively get an agenda addressed through the rest of this year, because if we do see a change in the administration, that could have an impact on what happens with the CFPB coming into next year. So in terms of the regulatory landscape, BNPL, the CFPB has announced that certain aspects of the credit card rules apply to buy now, pay later transactions. They recently just came out with some declarations on earned wage products, earned wage access products. They've already reduced overdraft fee and late fees, really, I think, impacting the revenue streams that card issuing financial institutions or depositories have. And then I think even some focus of trying to keep everybody under 36%, I think that sort of hurt some of the small dollar lending opportunities, because you're talking about borrowing a couple $100. It's hard to make money and treat that as a traditional loan product. So I feel like the regulators have been pretty active over the last year. And to some extent, I think that stymies the adoption of machine learning and credit. There's still a bit of fear and adoption that banks need to take on, I think, to fully get the benefits of that. It does add complexity in fair lending. I'm big working with companies like Fair Play that really help simplify the impacts that advanced modeling has on disparate treatment and fairness as a service. So I think there are ways to accelerate that adoption, but not everybody is caught up with the opportunities yet. So I think as we look into the future, it's bright for innovation. I think certain financial institutions like Cap One, I think Fifth Third is a great example, Chase, others that are putting a lot of effort into partnering with Fintechs and using data science as a competitive advantage. Those will start to separate even further from other institutions who have been slow to adopt or haven't hired the talent that they need to be competitive.
Kevin, given the level of uncertainty that exists with the election, with a lot of changes ahead, what advice do you have for innovators and entrepreneurs in this sector?
Well, Q2 of this year was the first time that funding has been up in 5 quarters. It's the highest it's been in 5 quarters. It's up 19% quarter over quarter. And I've been telling people for the last maybe 2 to 3 months that it feels different. Like what I've noticed is if I went back a couple of years ago, 2.5 years ago, I worked mostly with early stage startups. And I would talk to a new startup, 1 to 2 new startups a week. And probably about 30% of those I became an advisor for. And then what started to happen going back a couple of years ago was people would be like, hey, I have this idea, but I'm really having trouble getting funding. And funding just kind of dried up unless you had just a great leadership team and a great idea that people really bought into. So I think what's really important is we're coming out of this period, I think, with much more rationality around how investors and venture capitalists are what they're really looking for. They're still looking for great and differentiable ideas. They're still looking for great management teams, and you need a good plan, and you have to have something that looks like on a unit level that it can make money in the long run. So I would just tell people who are entrepreneurs and innovators that you can't just throw something together and expect to get funded anymore. You have to have a well thought out business plan, a credible team, a good idea, like what problems are you trying to solve? What real problems does your company address? And then I'd also say that having worked with well over 100 startups over the last 9 years, that the best ones use advisors wisely. They see advisors as an extension of their own company to add or deepen the skills and capabilities in areas that are important for them to succeed. And so I would be, I think it's important that companies that are starting out find people that you trust, that have great experience in areas that you're not deep in, to even out the capabilities that you need in order to have a successful business.
Absolutely. Well, thank you so much, Kevin. This was incredibly insightful.
Well, thank you again. And Donna, I love working with Valid. For those that don't know about Valid, Valid has great deposit and check fraud models. They're great people to work with, great people to partner with, and one of my favorite clients. So thank you for the opportunity to talk with you today. I really appreciate it.
Thank you.